Now is the man himself, Ron Barron, Chairman and CEO of Barron Capital. Good morning to you, sir.
Good morning.
This is always a big day for you.
Very big day.
And you've put together a whole list of really remarkable CEOs and companies that you've been investing in, and this is now year 30.
It's year 41 or 42 for my business, and for this conference, it's the 30th one. Amazing.
So I teased it before. Did you have to call Elon to get the Cybertruck that's sitting outside? How did that work?
Yes.
Yes?
Yeah.
And they take it on a truck, or what happened?
I don't know how it got here. I presume it's by truck.
And have you driven it yet?
No, but I'm getting one. I looked at it just now. That's the first time I saw it. I'm getting one.
Let's talk about Tesla, as we always do, but then I want to sort of broaden it out and talk about the markets and some of the other companies that you're invested in. There was an analyst call just yesterday, this is HSBC, which really initiated coverage. They said that their price target was $146. I assume you probably looked at this and probably laughed, given your very bullish views on Tesla. But what was so interesting about the report was that they really were trying to define the company as an EV automobile maker. Is that the way you think about this company?
I think about it as a technology company that's providing services to their own company and to others. They can't possibly be matched by anyone else. They have data, technology. They make cars cheaper than anyone else. When Ford makes one of these cars, an electric car, every car they make, they lose $36,000 on. $36,000 per car. Our company now makes about $8,000 or $9,000 in profit a car. They were making $15,000 in profit a car. But if they build a plant that cost $7 billion for 1 million cars, that plant was making $15 million a year, $15 billion a year on a $7 billion investment. $15 billion on a $7 billion investment. An ordinary industrial company would make 15% on capital, 20% the most. This guy's making his capital twice a year. Now he's making it once a year. He's making $8 billion in a $7 billion plant. So he's the lowest cost person. Everything about the business is trying to drive prices lower. Right now, they will be in the 1900s, early 1900s, the automobile companies were tremendous innovators. No longer is the case. In the 1950s, they decided they were going to go for profitability, and they outsourced all of their supply chain to their detriment. And all these companies went bankrupt. Hundreds of them went bankrupt. And now the way we're going is that their electric cars, they drive, I guess they have about 30 miles a day, 30 or 40 miles a day, and they have 3 million of them that are collecting data. 100 million miles a day they're getting for data, and then they're also getting compute that they're going to have more compute than anyone in the world in 18 months to train it.
Have you been surprised, and this is true of the other EV makers, a lot of EV makers have put up big goals in terms of sales, and then they've scaled those goals back, saying there's just not the customer demand. Do you think that is the responsibility or a function of the products that these other automakers are putting out? Or do you think that there actually isn't the demand for EVs writ large that maybe was anticipated or expected?
There's 1.5 billion cars that have to get replaced. They do about 80 million cars a year, and a small percentage of those, 10%, are electric right now. Ultimately, it's going to be all electric. But the reason there's not more demand is the cars that are out there are not very attractive by the dealers, by the car companies, and they're expensive, number two. And then in addition to that, the dealers who sell them, they don't want to sell them because there's nothing to service. The dealers make all their money on servicing. So dealers sell them, They're not selling them.
You talked about trying to bring prices down, and that's something that Elon Musk has talked a lot about. At the same time that he's going to try to bring prices down, you have the potential for Tesla to become a target of the UAW, which of course just made this new deal with the other big automakers at meaningfully higher prices in terms of what those employees are going to be getting. What do you think about that?
I think Tesla's employees are the highest paid workers in the world as far as the automobile companies go, because they own stock.
As a function of the stock.
And that stock option would not be present in all instances if it were a unionized company. When the unions were in control of Fremont, as soon as they had trouble, they ran from it. Tesla took over that plant in Fremont after the unions had left, after the company had gone bankrupt. Tesla employees, there's a good story that one of the executives of, and then I want to talk about it.
Yeah, no, of course.
One of the executives who devised the pay plan for the employees was telling me that he's a small Jewish guy like me, and he was walking through a plant, and a large black man walks over to him, shaved head, tattoos all over the place, and says, Ira, are you the man who devised the pay plan for us? And he says, yes. He said, I want you to know that I'm the first man in my family, the first person in my family to ever be able to afford a home. And thank you very much. And so the workers there make more than anyone else by far, and their health care, all the benefits are better. The unions have been trying to organize Tesla, Toyota, all the foreign companies for years. They failed repeatedly. Why? Because those companies are not, the union's not in business to keep the employees. They're in unions to have the power.
Before we move off Tesla, just for a second.
By the way, the stock went down yesterday, not because of that report.
Okay, what do you think it is?
Because Joe Biden, President Biden, who, by the way, I love what he's doing for Israel, but I don't like that much what he's doing in business. Some things I like. But he's the one who said unions should organize Tesla. That's what happened yesterday when the stock went down. Okay,
we'll come back to the Biden piece in just a second. Melissa Lee, I think, has a quick Tesla question because I know I want to talk to you about a whole bunch of other things. Melissa?
Yeah, Ron, thanks for taking my question. When you think about China, how do you think about the growth there? Because that's a key piece to the Tesla story. Li Auto reported its earnings yesterday and had strong EV guidance. It's gaining market share. I'm just wondering how you think about the competition, but also the weakening Chinese consumer. And have you discounted that portion of the Tesla story at all, given the Chinese economic forecasts out there?
Tesla right now is doing about 1.8 million cars a year. When we started investing in the company 7 years ago, when we invested between 2014 and 2016, they were doing 41,000 cars a year. So 41,000 cars a year to 1.8 million, they're on their way to 20 million cars. China is about 1 million right now of their 2.8 million. But a large percentage of what they make in China is exported from China to Europe. And the more they build in Europe, of course, the more they're going to save on transportation costs and duties. The idea is that China invited Musk in, and invited him in because the Chinese car companies had done very poorly for a long time. And the promise was that he's going to help them become better car manufacturers, and he's not trying to take over the market in China, better car manufacturers and develop a local supply chain. And so he was the only one that's ever been invited into China that's been able to not have a partner, a local partner, to operate their business. So I'm convinced that they have good operations in China. The person who runs their Chinese business, the Tesla business in Austin, in fact, is probably in line to be an important person at Tesla overall. He's Chinese, and he was brought from China to Texas and runs the business there. He's going to be in charge of all the automobile business. So I think the relations they have with China are exceptionally good. Both people are getting something from it, and I think that business will continue to grow. But he's going to open plants all around the world for low-cost cars. And wait till you see what's going to happen when all of a sudden they start selling cars instead of for $40,000 a piece, for $25,000 a piece, which is going to happen in about a year and a half from their new model. The new model, they think, is going to do 5 million cars a year. 5 million cars a year for the Model 2. That's coming.
I know we still promised we move off Tesla. By the way, but I just want to know this. Do you believe that autonomous cars and this whole idea of robo-taxis and the like has to happen? Is that part of the valuation plan for you? And the reason I ask is you just saw that GM Cruise effectively shut down their autonomous vehicle program in the U.S., at least temporarily, because they haven't been able to get it to the right place. Clearly, Tesla hasn't gotten there yet either. And so I'm curious, and we just had Derek Khosrowshahi on from Uber, and he said, look, it could be another 5 or 10 years before this type of technology is really ready. And we've been talking that 5 or 10 years sort of path for 5 or 10 years.
We have a small investment in Cruise, $30 million, and made the investment because I wanted to learn about the process that they were doing. Every one of those Cruise cars cost $250,000 to have the equipment that's on it in order to operate autonomously. They have to be specifically in mapping every city, and it's a tougher business. We were out there a couple of months ago to drive around in one. It was pretty amazing. You're driving along, they pick you up at 9 o'clock at night.
Right.
You drive around San Francisco, you pull up and there's a car next to you that's also no driver in it, and it pulls away and you pull away. It's like the headless horseman. I mean, really something. So we have a small investment in that. I really like Kyle. I like the executive who was there, who left and went to Exxon. I think ultimately Microsoft thought they were excellent and invested in it as well. But we have a very small investment. But as far as Tesla, that's software. No one has that. They have data. No one has that. Tesla is going to have that car. They're going to be able to charge for autonomous $2,000 or $3,000 a car a year to have your car operate all by itself. And it's virtually there. And I don't think people realize that I have any idea of what that's going to mean. And that's a business that ultimately, that business alone is going to be worth $1 trillion. That business alone is going to be able to do $100 billion, $80 billion a year revenues in 3 or 4 years and growing every time. And they'll do 20 million cars a year ultimately for themselves. And then in addition to that, of the 80 million cars, probably another 30 million will use their technology. Mary Barra, who I'm friendly with, asked me about, I don't know, a year ago, could I fix her up with Elon? Not a date, but to fix her up. And I said, sure, I'll set it up. And they went to Allen and Company conference, and they met. And she hadn't met before. And then afterwards, then I saw her on your program, and she quoted and she said, oh yeah, Elon, we text all the time.
Right.
We text all the time. And the reason that's important is that the reason they do this with the charging as well, the reason they're doing all that is because Tesla doesn't want to put other guys out of business. They're going to be his customers. Those people will make the metal, ultimately, for a lot of cars, and he will supply the guts, the Intel inside of a computer. That's going to be Tesla inside of cars. That's going to be an amazing business for them.
We've talked a lot about Tesla. Let's talk about investing more broadly. I don't know if there's other companies you want to touch on right now, but I just want to know, in this particular moment, given where you may think the market is, given where bond prices are, I think a lot of people are really trying to rethink what's the mix of what a portfolio is even supposed to look like in this world, given what's happening in Israel, in Ukraine and the like. Are you buying stuff? What are you doing?
Every day. I am amazingly bullish. And so basically in 1960s, there was Vietnam War, there was inflation, there were assassinations of the presidents of the United States, there was assassination of Robert Kennedy, assassination of Martin Luther King. I was a patent office examiner in Arlington, Virginia, and I went to law school at night and worked in patent office at daytime. And one day, right after King is assassinated, one of my friends, I'm on one side of the office, runs over and said, Ronnie, come over here. And I ran to the other side of the building. All of Washington was on fire. Amazing. So we got on our motorcycles and drove in. You're not allowed to. We broke into the city, driving around and came back. But that was the city falling apart. It looked like the country was ending. There would have been marches on Washington. And the market, the Dow Jones was 1,000. The GDP was 800. 800 billion. It's now 27 trillion. The Dow Jones was 1,000 then. It's 34,000 now. It's 5 doubles. 5 doubles in the last 50 years, 53 years. That means you double every 5 years, every 10 years rather. So that means that's when we're around 7, right? So basically, the way I think about it is that inflation, whenever you have a war, you have a pandemic, you have to have inflation, government has to pay for it. And when the government pays for it, then when you come out of it, they have to pay it back. The way they pay it back is not by paying down any debt. They pay it back by making your money worth less. So there's inflation. So the way we think about things is that inflation is going to reduce the value of your money in half about every 14 or 15 years. About 4 or 5% a year is inflation. That's my whole lifetime. 4 or 5%. Sometimes it's 2, sometimes it's 7, but 4 or 5% is the number.
So you would never buy a 2-year bond or a 5-year bond or
Ever.
a 10-year bond?
I've never owned a bond.
Ever?
Ever. Not one. So I'm invested in, and I don't have a lot of cash either. I'm always invested, and whenever I have a chance to buy more, I buy more. So in Tesla, I gave you the sheet before that showed that when I started in business, so 1970 I come to New York and I'm in debt. 1982 start Barron Capital. We had 10 million under management. 10 million, that's an M. Then 1992 had 100 million, now it's 41 billion, and we have 40 billion of profits. So basically, most of the money that we manage is profits. Of course, we had 55 billion a couple of years ago, but that's all from depreciation. Now, I think what's going to happen in the next 2 years, by December of 25, I think we'll be back to where we were in.
And what gives you that confidence?
The businesses are growing, and the multiples are now lower. So basically, multiples are now lower. The businesses are growing. You know, the growth in our country is about 7% a year historically. It's about 4 or 5% of inflation, and about 2% is real. All the growth that we've had in the United States, in our country, has been in the last 200 years, and it's the last 20, 30, 40 years, it's accelerating. Growth is accelerating, it's not slowing down. And so basically, it used to be a capital-intensive economy. Capital represented, I think it was 65% of book values. Now it's 44% or 42%. It's becoming less capital intense. Multiples should be higher because of that.
We're going to talk a lot more with you and a number of your CEOs throughout the program. I want to thank you for this 30 years in. Amazing.